As I had mentioned over the weekend, global stock markets may start on a rather good note, but there may be increasing uncertainties as we go forward. I still hold my same prediction. We are just into the second day of trading in the global stock markets. Right now, we are looking at the US markets about to open shortly for trading. Stock futures, as I see, are trading into the red after some higher than expected wage data has raised fresh concerns about inflation ahead of the Federal Reserve's rate decision on Wednesday. And McDonald's shares have also fallen after some disappointing earnings. The employment cost index, which is a measure of wages for the civilian workers, has jumped 1.2% in the March quarter, above the 1% consensus estimate from economists polled by Dow Jones. Treasury yields have also jumped following the data. And as I mentioned, McDonald's has missed estimates due to boycotts hitting Middle Eastern sales, and it has sent shares down 2% in the pre-market. Coca-Cola shares are lower, even though the soft drink giant has beaten estimates and has even raised its guidance for the coming quarters. Okay, the basic fundamental reason for this fall is that stocks in general are headed for the first losing month since October of 2023, as rate cut expectations have dropped significantly from where they were at the start of the year 2024. So the Dow Jones index is on pace for more than 3% loss in April. S&P 500 and Nasdaq are headed for declines of more than 2% each. And that's how we are about to see the end of April. Markets are now pricing in just 1/4 percentage point cut in 2024, down from the 6 or 7 anticipated coming into the new year, as persistent inflation and a resilient economy have raised the likelihood that Federal Reserve would stay higher for longer. When you look at the size and the scope and the scale of the rally of the October lows of 2023, and then you layer on top of it the stickiness of inflation in the end, you wouldn't be surprised to see some dampener on the market for a little period of time. This is going to reverberate in the US markets today and also into the Asian markets as they open for trading tomorrow. May 1 being a Labor Day holiday, then we look at day after tomorrow, which is Thursday. So there's also plenty of economic news on the dock this week, with the US Federal Reserve policymakers convening for their 2-day policy meeting on Tuesday, Wednesday. So they announced the meeting Wednesday, 2 p.m. New York time. The central bank is broadly expected to keep the interest rate steady as of now, but the traders worry that the Federal Reserve Chairman Jeremy Powell's post-meeting comments will lean more hawkish after the recent spate of hot inflation reports. And this particular, the report which has just come out, employment compensation measure increasing more than expected in Q1, is only going to add fuel to the fire. As I mentioned, total compensation costs for the workers rose by more than expected in the first quarter, providing another sign that inflation pressures are not going away. The employment cost index has increased 1.2% for the period, faster than the 0.9% in the fourth quarter of 2023 and higher than the Dow Jones estimate of 1%. Expected to reverberate across the US markets and across the other markets, global markets, as they open for trading on Thursday. To get to know more, do join our Prime or Prime Plus Telegram groups for the US markets. For the Indian markets, you can join very simple, the Ram Navami package, or you can join the very nice premium value, which gives you forecast for a whole week and very good stock recommendations. For both, you can WhatsApp us on 982-086-1044. Happy investing and have a great investing day in United States. Take care. Bye-bye.